For more on the financial outlook for the new year, we're joined by Rod North, Executive Director of Bourse Communications. Rod North, good morning to you.
Good morning.
Let's begin with the end of 2009. We've got a couple of hours of trade left. How are we going to end the year, the Australian share market?
Well, I think the share market's going to be fairly flat today after the lead from Wall Street, so we'll probably see it finish around the 4,800 level, which is pretty outstanding considering we came from a pretty low base back in March of 3,109 and really started the year at 4,000. So it's interesting just to look at what's happened over that sort of 12-month period of the market.
And how do you go comparing what's happened in Australia over the past year to, say, London?
Well, it's interesting too because if you look at both the US and the UK markets, we've seen significant recoveries occurring there over that sort of 12-month period as well. Not to the same pace. Yeah. I mean, the Australian market has seen an incredible recovery of around 52% for the year from its low point.
The strongest point in 16 years, I think.
Yes, it's been one of those amazing recoveries, largely led by, our top stocks and in particular the banks. Each of the banks has risen over 100% from their low points. We've seen BHP and Rio. Those two stocks alone have really sort of made that overall index performance be as outstanding as it has been. So it's been really largely driven by the top end of the market at this stage.
So why have those type of stocks performed better in the recovery phase in Australia than they have in the US or UK?
Well, I suppose, Joe, particularly in relation to the banks, you've had the government deposit guarantee there. You've had banks largely write off a lot of the bad debts fairly early in the piece, and I think you saw a lot of consolidation occur from sort of late 2007 through 2008 to improve those companies' performances, with a bit of downsizing, but in particular, getting the balance sheets in much better positions, to sort of take advantage of that. So certainly the banks have been in that powerful position.
So, Rod, let's take a look now to 2010. Where do you think investors will be parking their money next year?
Well, I think the share market still offers lots of opportunities because it's interesting. The market peaked back in 2007 with an index of 6,800. We're now at 4,800, so there's some recovery still to occur there. And it's interesting when you look at sort of statistics, it often takes, and we've done a fair bit of analysis over the last sort of 100 years of what happens with share markets, and it's interesting that it normally takes about 33 months for the share market from its low point to get back to its high point. So we've still got a way to go. So there's obviously still lots of opportunities there, but more particularly in the sort of second level and the smaller cap end of the market as well, which hasn't moved to the degree that it would. And it'll be interesting just over the next few months where we see the reporting season, particularly in February, just to see how those companies are going to perform going forward.
So you reckon there's still some money to be made? And what can we take from the fact that there are a number of floats, a reasonable number of floats about to happen this year as well,
yes,
next year?
That's been very interesting because there have been few and far between this year, and then all of a sudden, we've got 20 companies lining up to list on the ASX between now and sort of January, February, but then there is probably another sort of 80, so we could have up to 100 companies listing on the stock exchange before 30th of June 2010.
Does that indicate an optimism about where the market's headed?
Yes, it does, and a lot of these companies, interestingly enough, were poised to go back in late 2007, didn't get the opportunity to list then because they couldn't raise the capital, but those companies have continued to build their businesses and trade on, so they probably actually represent better propositions this time around when they're going to list. There seems to be plenty of capital around because a lot of the floats have been very much focused on the resource and mining sector as well, and it's been comparatively easy for that money to be raised, just recently.
And Rod, just finally, are you prepared to be brave and say that we've turned the corner from the GFC and global financial crisis and that there are no more nasties lurking around waiting for us?
Well, there could be a few nasties because I'm still a bit nervous about the December GDP figures, which will come out, but not until March. So we've got to keep an eye out for that.
Rod North, thanks for coming in this morning.
And Happy New Year to you.
Thank you. All the best to you too.